welcome. I am Jonnita Stanton. We have Reginald Perryman, Kashka Williams, and we are TSARE. This is the There's Something About Real Estate podcast where we talk all things real estate.
All right.
And so we get these questions all the time about you have buyers.
Right.
Like super concerned. I want to be buying this house. What's my taxes going to be? What area have the lowest taxes? And how can I get there?
Right. So a lot of people don't know how to calculate their taxes. Like you see the current tax bill, but a lot of times people get that pop-up tax and you're like, oh, I'm paying $2,500, and then next year go up to like $4,300. And that's huge, especially if it's included in your monthly payment.
So the truth, I'm gonna tell the truth. The truth is a lot of realtors don't want to tell people that they're gonna have that pop-up bill because they know that's gonna scare them from purchasing that house possibly.
Right. But it's some good lenders out there. It's funny because some lenders, you'll qualify for the house, but then some lenders know how to calculate it. And they'll come back and be like, oh, you don't qualify for this house because the estimated taxes are going to go up and it's going to throw your income to debt ratio
Whose
up.
job is that, though?
The lender.
The
realtor.
It's both.
It's the realtor and the lender's
I think
job?
it's the realtor's. I think it's the realtor's job to tell you what's going to happen or likely to happen. And the lender, since they're doing your numbers, is to kind of help you calculate what it's going to look like as far as your monthly payment. Because the realtor doesn't always know what your payment is going to be, what rate you got. Because some things the lender and the buyer don't share with the realtor. But as a good realtor, you'll say, okay, this house is Homestead, the person being here, 25 years, there's going to be, the cap is going to be removed, and the property's going to be assessed at this, and your new SEV and your taxes are likely to go up.
So you got to explain that. Explain the cap being removed. What does that mean? So, and why is it important that the person live there for 20 to 25 years?
Yeah, so, and this is for Michigan in general. So, like, we have our homestead exemption. So, there's a cap. What is it, like 5% per year? It can't go up over a certain percentage if you've already stayed in the property. But so if I've been there 20 years, it's only going up by a certain percentage each year. But the minute I move, that property is going to get reassessed and that cap is removed. So the new buyer is going to get a much higher tax. So that's why you have people that they own properties and they may own a property on the same street and their taxes is, $900 a year, right? But then their neighbors is $3,300 a year. And that $900 has probably just been creeping up by a small portion every year. And the neighbor, that house probably changed hands 3 times in the last 20 years. So the reassessment is keep happening. So it's being taxed at the new tax value.
So what's the homestead? Principal, residence, exemption.
Yep. So you answer it.
You
want me to answer?
I said,
Okay.
it's the principal residence
But what's the exemption
So that
for?
basically means that you live in the house. So it's not an investment property. It's not an Airbnb. It's your primary residence. And I believe you can get that on your second home too, can't you?
It depends. Yep. It's a certain distance. Or so Michigan won't allow you to have 2 principal residents in the same state. So you can't claim 100% on 2 different properties.
Right.
Yeah, you can claim 100% on your primary residence, but if you got a property in another state, I think you have to claim a certain percentage, and you can't claim your full 100% here in Michigan.
I didn't know that.
I believe, but that's why we're going to send people to the state website.
Okay.
But usually, when you're buying a home, you do want to check for that homestead exemption status because if it's owned by an investor and it's non-homestead, then that means it's being taxed at the higher rate. They're not getting the 35% or whatever that deduction is off of the property taxes. So it's a possibility if your taxable value and your SEV remains somewhat the same, it's a possibility with the homestead exemption, your taxes may actually go down next year. They're not going to go down now. They're going to go down during the next.
Yeah, you got to wait till for Michigan, is it June?
Yep.
All right, so let's break down. This is going to be a little bit more of a technical show. Let's break down the SEV and the millage rates and taxable value and all those things. I'm going to come at y'all with, some of these dictionary definitions.
So you're going to educate the people?
Oh, yeah.
Right.
Before we do that, can I say one thing?
Yeah.
So can we explain why there's a difference? Because a lot of people always want to know why. So why am I paying more as an investor than a homeowner?
Yeah, because it's non-homestead.
Yeah.
So really, and it has a lot to do with money is being paid. So your taxes includes several things, including what's going to the school system and things of that nature. So with the non-homestead is basically you're getting taxed as a non-owner occupant. So you can't claim that exemption and get that reduced rate. Mm-hmm. Basically, that's what it is. So if you're buying a property that was owned by an investor, but here's the thing, timing has a lot to do with it. So if the investor, let's say I brought a home after the tax bill was already paid and it was already assessed, and I flipped it and sold it before the new tax bill, it may still show that homestead rate because I probably brought it from an owner occupant. Mm-hmm. Then when I sell it to the new buyer, they're going to claim their homestead. So the taxes may go up because it's being reassessed and it may have a new SEV value on it.
Okay.
But so it has a lot to do with timing, but it's good to know what your projected taxes are going to be for the following year. Mm-hmm.
Mm-hmm. And I normally, advise people, I'm just a proponent of call that city.
Yep.
And talk to the tax assessor's office and say, hey, I'm thinking about joining the community. Right. What's the millage rate for the area? Mm-hmm. So state equalized value, that's the SEV we've been talking about, right?
Right.
And so it is half of the market value the city assessor assigns to your property. But that's just their opinion.
Right.
The city's opinion of value, not the actual value.
Not the appraised value, because people remember it's double the whatever. No, that's a myth, right?
Right.
Right.
Because the city is using comparable sales, but some cities can go back several years, right? Well, most cities can go back several years, but there's a limit. But when you think about that, them going back 2 years or whatever, before they could go back further, they can go back 5 years or whatever. So that works for you and against you. Because if you're in a changing market, when our market crashed, people were still getting tax and SEV values and assessments based on 3 or 4 years prior to that, when the prices were 40% higher. Mm-hmm. So you were getting taxed as if your home was still worth X amount of dollars. Mm-hmm. Now as the market is appreciating, the cities are not always
they
catching
jumping
up,
in
but they
quick.
Jumping in now.
Right.
Yeah.
You look. So the city assessor's opinion of value, and half of that is so if the city believes your house is worth $500,000,
right.
Half of that will be your state equalized value, $250,000.
Right.
All right. So.
But your market value may be $700,000, right? And the city, once that sale is recorded for $700,000, now that's a new basis that the city may take into consideration. Mm-hmm. But it also depends on what else sold in the area.
Yep, and that appreciation is also going to be, like you can live in your house and do improvements while you're there. Right. You still can be reassessed based on that stuff.
So
that's why they want you to pull permits.
Yeah, so when you pull permits and you add, 200-300 square feet to a property, now your house is going to have a new assessment because it's larger in square footage.
Or if you upgrade your kitchen. You're supposed to pull permits on your kitchen.
Right.
A lot of people don't, but you're supposed to pull your permits on your kitchen. They want to hear about the upgrade so that they can increase your SEV.
Right.
Or your capital value.
The capital improvements that you made.
Okay. Taxable value.
Yep.
Taxable value is the figure you actually is what you actually pay your taxes on, the taxable value. So a lot of people think that you pay taxes based on the state equalized value, but it's not paid on the state equalized value. It's paid on the actual taxable value, right?
Explain.
So what do I have here in my notes? The assessed value of your home depends on the county tax assessor's determination. In some jurisdictions, the assessed value is also the taxable value, but other locations may be different. So what do you mean explain the taxable
What
value?
you just did.
Oh, okay. Just want to make sure.
So in other words, you have to. So each city is going to be different, right? But and each property can be different. So the best thing to do is talk to your assessor's office and actually start reading your tax bill. They have information on there on how they came to this conclusion. What a lot of people don't know.
And it be in bold print.
Yeah, and they tell you if you feel like you want to dispute this amount, you can.
Because they're not always right. It's just their opinion, and sometimes their opinion is wrong.
I've seen people get $1,200 reduction. I've seen people get $50 reductions, right? And it may take you 6 months. It may take you some time to get it done, but you got to think this is going to affect your property from this point forward.
Exactly.
So the assessor doesn't come into your home. You know what I'm saying? They're doing a assessment.
Somebody walked into my home.
Zestimate, right.
You remember that?
Where?
Yeah. On party? At the house.
The one you renovating?
Yeah. No,
Well,
like
that's
somebody
different.
came. No.
Oh, he tried to come in your house. No,
exactly.
he didn't come in there. No.
Oh, yeah.
So they'll try. Yeah. If you,
Yeah,
they be like, I'm a city official. I don't care who you are.
Right.
No, you're not coming in here.
Yeah.
Well, I'm gonna have to tax it at what I think. Okay, go ahead and do that. See how that
Yeah.
works for you.
Well, I mean, if they think, so in some cities, it's funny because like, in some cities we have bungalows where it's 2 bedrooms down, a master bedroom upstairs. But some cities, they're only considering the square footage on the first floor because the house was originally built and the upstairs was unfinished.
Okay.
And somebody finished the upstairs years later. So it may actually be 1,200 or 1,300 square feet of living space, but the city may only have 800 or 900 square feet of living space.
Yeah, they will try you though. I forgot about that guy.
Yeah.
Taxable value versus the market value.
Yeah, market value is what we doing in the market right now. Is what these buyers paying. Because the buyer, usually the assessors are looking at similar data, but they're looking at other transfers as well that are not primarily like in the MLS, for example, right? But the market value, you got to think the assessor is not assessing every property every year. They may not assess your property for another 2 years, but the market value can change in 6 months.
I wish we could get a city official down here that would be willing to talk and explain, because I know there is no way that they have a real system.
They got a
doing
system.
it. I don't think so.
Yeah.
Because I would like to hear it. I want to hear
they
their system.
look at similar data as what appraisers look at. I think you got to look at when she's going to talk about millage and all that stuff too. I think they just have different ways of factoring their numbers than we do, and it's a lag. And like I said, that lag can hurt.
Yeah.
Yeah. It can benefit you too.
Yeah.
Sometimes, yeah.
Yeah.
When the house...
If they're behind the market when the market is going up.
So that's what I'm saying. I don't think that they have a system. I don't know. I would
There's
like
a
to hear
system.
I would like to hear the system. I don't think they have an efficient system. How about that?
Well, don't tell them that.
No, because sometimes it hurt.
Yeah, it do hurt. I know
A lot of time it hurt.
Yeah, I know people paying tax. I know them like, man, I'm glad I ain't you. And they
All
my
they gotta do
neighbors.
is go down there and fight it.
Yeah.
People don't understand that you, just because they said this,
Right.
you can go dispute it.
Right.
Most people won't do it.
Yeah, they don't want to spend the time.
Yeah, and it's free.
Or they feel like it's not going to get them anywhere. But
Or
you never know.
they're just scared because they don't know. Right. And they feel like they know more than you know when they really don't know shit.
Right. Yep.
Okay, what is millage rate? Millage rate, all right, is the rate. The millage rate is the tax rate used to calculate property taxes. So it represents the amount per every 1,000, right? Assigned millage rates are applied to the total taxable value of the property in order to arrive at the property tax amount.
So millage rate, every time there's an election, somebody talking about millage rate.
Yes.
Increase.
Right?
Yes.
Millage increase.
Vote it down.
Yes.
And we don't pay it
Proposal
no
ABCD.
attention. We don't pay it no attention because one official talking about they're going to legalize marijuana. The other official talking about they're going to improve crime or something like that, and then it'd be like millage rate. And ain't nobody talking about it much, but you hear it get thrown around. And then the average person is not really realizing how that's impacting their property taxes.
Yeah, it's typically like explain, like, you'll have to pay this amount. We'll add this amount onto like your property taxes in order to pay for.
Because we're trying to improve the schools, or we're trying to improve this
roads,
or whatever. You know?
So sometimes it's not all bad.
It's not bad because you got to think. Some communities are better than others because of the taxes they collect.
Yes.
They can afford improvements to city-owned structures and roads and things of that nature. So it's important, but then it's like, did we vote for that, or did we really want that as a people? And some people completely ignore it when they go vote, and it's just like,
or they just don't understand.
Yeah, they don't understand it.
But I think that you should really pay attention to that, because that's part of why certain, like you just said, certain cities, their roads aren't tore up, and certain cities, their roads are horrible. Right. You know what I mean? Like, I don't want to live in your city.
Yeah, you need an off-road vehicle to drive. I remember one time Greenfield between 8 and 9 Mile was tore up.
How about Greenfield between Ford Road or Chicago and Ford Road?
Yeah.
The minute you hit just like north of Ford Road, oh my God.
Yeah, it was.
I'm not throwing my city under the bus, but it's some major roads that need to be that have always needed to be repaired, that they won't repair the right way because they're probably not collecting enough taxes to do
everybody know Detroit got them potholes.
Yeah. But it's the same thing for your schools. Everybody want to know why their schools not being updated and things like that. It's because you're not you voted down that millage that could have helped the schools.
Or the population. So here's the thing, like when you see areas, like you see cities that's used to having income tax and property tax revenue from, say, 2 million people, and now it's down to 700,000.
Yeah.
That's a huge decrease. So now we can't keep up all these schools. We have to close some of them. We have to start consolidating some things. So I don't think people really realize what their property tax, what it contributes to the city. Right? Income tax is one thing if your city... if you're in the city, you're paying income taxes on, but property taxes is huge.
Okay, so I want to play devil's advocate in regards to some of these cities with the higher tax, but I'm gonna move through a little bit of this, and we're gonna come back, to it.
You saying you can't justify the high tax?
Exactly.
Because other cities are doing.
I want to talk about that a
just
little
as well or better. Yeah.
So look, because I do want to get this out here, the formula for and I don't know any place other than here. Right. So I'm just gonna go based on here, right?
Okay. Hold on. This is for the state of Michigan? Or this is for, I thought that was by county.
No.
Is it the state?
It's the state.
Oh, okay.
Yep. Because when you're talking about the meals, so that's one of the things with the homestead versus the non-homestead. Right. So people who live in their houses here in Michigan were able to get an 18 meal exemption, which decreases the property tax. If we don't actually live in the home, we can't get that exemption. Right. So that's what increases the property tax. So then you want to know, well, how do I calculate going forward? So if I'm a person, I'm in a market, I want to buy a house, or shoot, I'm in a person, I want to do a cash out refi and do some upgrades on my house, like what's going to happen to my property taxes at that point, right? So you want to take your taxable value, which would, like Reggie stated, you get that information in the mail probably if you're already a homeowner, or if you're going to be becoming a homeowner in that.
Wait, you know what that piece of paper says when you get it in the mail? Right. It come in from the city assessor's office, but it says this is not a bill. Yeah. Mm-hmm. And they're just telling you this is the taxable value of your
bill's
property.
Coming in a minute.
And most people be like, and just throw it in the garbage because it's included in their mortgage payment, so they don't even pay attention.
Yeah, but your mortgage should go up if your tax bill goes up.
Exactly.
Yeah.
Or if it's included in your mortgage payment, you can contact your lender and say, hey, I'm estimating my property taxes are going to go up. I'm going to put a little bit more in my escrow now because I want to keep my monthly payment the same.
Okay, that's a tidbit, little gem.
Yeah.
Alrighty.
Budgeting.
So I lost my little train of thought right there a little bit, but so you want to know that it's the taxable value. So you got to find your taxable value. So you can, if you're going into the market for that particular city, you can call that city up and say, hey, I'm going to be purchasing once I purchase, what will I be taxed on? What's my taxable value? And then you will divide that number by 1,000.
Okay.
And then when you get that, you will multiply that by the millage rate that they give you.
Numbers, right.
in your township or city or whatever. Right.
And then that will equal your tax rate for that property. Okay. It's a very simple formula. I mean, I'm suck at math in any capacity, but it is a fairly simple formula. Your taxable value divided by 1,000 times the millage rate.
Okay.
Right?
Cool.
So I did have a couple calculations down here or whatever.
Right,
and so
let's see what you got.
And I'm not going to run through them like super in depth if Shaka want to do some math or Reggie, because I'm just not that person. But
you just gave them the basics.
For a couple of our cities here, like the 2021 homestead taxes for the summer was like 43.8953. For the winter, it was 6.9187. And then what they do is they take that number, add it together for a total of 50.9040.
And that's the homestead.
And that's the homestead.
Right. Okay.
Right. So that's the number so the taxable value divided by 1,000 times that number is how you come up with your tax rate.
All right.
Right. All right. And then your non-homestead. So if you look at these, the homestead for the summer was significantly different for the non-homestead if you're not living in a house. So we went from...
it's like almost a 18 point difference, right?
Yeah. So 61.9853.
So that's standard.
Right. So I want people...
It is.
The 18 is the standard between the homestead and non-homestead.
So I want people to know that's at home. If you're watching this, we just going to put this in the comment section. We're going to actually put the scenario together.
Yep, because it's a lot. It's a lot of numbers. And then I'm sitting here reading from paper. It's a little boring.
Well, we want to show you basically this scenario, and we'll show like a couple different taxable values, and we'll show the difference in property taxes. Because here's the thing. We talked about this on a show where we get a lot of out-of-state investors, so investors, period. And they buying like a $20,000 home. And they like, why the tax is $2,000, right? Versus a $120,000 home. And the tax is $2,100. You can't make sense of it just looking at it from the outside. But that $20,000 home is in a $120,000 neighborhood.
Exactly.
So it still has that taxable value on it, even though the condition isn't that great, because the assessor probably haven't seen the condition of that property in 2 years back when it was actually livable. So those are some things that we have to take into consideration.
That's why you have to you have to do your research. And if that is the case, then you go dispute it.
Right. So I think the key points are like this information is public. Right. It's fairly easy to come by. It's literally either Googling, the tax assessor's office or finding out for the state, because you can like pull up all this stuff for like your state.
Right.
And and it's a fairly, easy formula to come by, But a lot of people really, really stress out about the taxes. And so for people that are still living in their homes or you feel like, okay, my taxes just went up, appeal it. And for Michigan, we got this, we're going to put it in our comment section, but the www.legislator.michigan.gov, where you can find more information about how to appeal your taxes if you're feeling like this is just, crazy.
You know why this show is important? Because one, we still in our area, we still get a lot of people. For one, if you below a certain income level, you get like certain exemptions from paying property taxes, period. Two, we get a large number of people still losing their homes for property taxes. So if one, you wasn't, And shout out to Herb Strother. He say this all the time because it's people losing their homes for property taxes who shouldn't have been paying property taxes in the first place
They may have been
because
exempt.
they were exempt.
Yep.
Then there's people losing their homes for property taxes who shouldn't have been paying that rate,
Exactly.
but nobody told them, right? And then even a lot of people don't know disabled veterans, they don't have to pay property taxes, right? So,
What about our
at
seniors?
least here in Michigan, there's benefits for seniors too. There's so many people that can either be exempt or reduce property taxes, and nobody's looking at. They're just saying, like me, I get my tax bill, I just pay it because it's not a huge expense on me. But if it creep up $1,000 more than what it is now, it's gonna raise an eyebrow just because of the huge gap. Like what made the difference? But most people just ignore it and keep going on, and they get behind.
And I'm the opposite. When I get my tax bill, I don't just pay it. I need you to explain to me why this is so high. No.
Yeah, mine's went up $50 last year, $20-something before that. So I wasn't.
So a crazy story. This just happened today.
Right.
We got a flip in Southfield, and the SEV was $44,000, and now they got it at $88,000.
Yeah.
It's like, bruh, that's huge.
But
you know what I mean?
It was capped before y'all got it.
Yeah. And that's how we got our show topic when he said something. I was like, I know a little bit about this.
So here's the thing though, for investors, right? Because you're not claiming a homestead, is always good to look at, okay, I'm buying this from an owner occupant. How long have they been there? Now, if the house changed hands 2 or 3 times in the past 10 years, it's probably safe to say the new SEV and taxable value may not change as much, right? But if that person been there 20 plus years and you're buying that property as a buy and hold, so you got the cap that's going to come off, plus you're going to be paying a non-homestead rate. So what does that do for your numbers if you're calculating your rate of return, your cap rate and everything, and you're looking at, especially if you're financing the deal, so you buying this piece of property, it's a rental property, you estimate after taxes and insurance, maintenance and everything, you got $400 or $500 a month cash flow coming in. But the taxes go from $2,800 to $4,600. Now you don't have $400 or $500. That changes everything in a matter of 6 or 8 months.
And so your ROI, it may not be a good investment anymore.
Exactly. So if you know that up front, you understand this up front. What are the current taxes, but why are the current taxes the way they are? And how do I estimate what this is going to look like next year?
Yep.
Educate yourself.
It's like, so our high tax area in this area here, Southfield.
Yeah.
And I get calls, I had a friend call me a little while ago, basically considering selling the house because he's like, my taxes are like $12,000 a year.
Yeah.
How much of a house?
The current value is probably around 4. When he purchased it, he probably purchased it at like the high 2s, low 3s. One of them larger colonials.
Right.
Probably 3,000 square feet almost.
So they could have a high millage. And it doesn't always have to stay. So you got to understand the millage can go away after they...
it depends on
what you voted on.
Right.
Whatever they agreed to when they voted for it.
Right.
So it doesn't always have to stay. So once the school has been... Whatever schools have been improved on, then that millage leaves.
And so that's what I was getting.
But when you talk about politics... They figure out another way to spend that money, or they vote on it and then they replace it with something else.
Well, they got to vote on it though.
Yeah, but what we just talked about, most people not paying attention when they vote.
Right, but some of our people, and I'm sure Michigan and the Southeast area, like this, not the only place that's getting. I'm sure we have like throughout the country, areas that have these high tax rates. And they may not necessarily be justified. Like, the schools are probably still not the greatest.
Right.
The roads are probably still not the greatest. Like that.
You trying to
so you do
figure
your
out
devil's advocate, right?
You got a $300,000 house in one city. The other city over is $300,000 home. Similar SEV and taxable value, but one person is paying, 60% more in taxes or something, right? How do you justify that? Is what most people would ask. And then you got to factor in like how much of the city is made up of commercial real estate, right, versus residential. So there's a lot of other factors into that. And this is when people are choosing cities, people say, okay, I want to move in a city with a good school system or where the price point is this. But very few buyers know to look for the cities where the property taxes are affordable. You get some that say, okay, well, how much are the taxes? And you get the loan rep that says, you qualify for $300,000, but the taxes can't exceed $4,000. Well, that may cut out a certain city overall, right? Because you know the taxes on a $300,000 home are going to be over that amount.
Typically, though, not always, because Detroit is one of the cities that she's talking about, right?
Right.
But typically, when you pay those taxes, you kind of you get what you pay for. Those are your services. You know, your libraries, your schools, your police department, your fire department, your ambulance, your roads.
Right.
So like me, I'm one of the people that, for the most part, I vote for the millage.
Yeah.
Right. Understanding that I'm going to do my part of paying.
Pay Caesar his money, right?
I mean, paying to make sure that my kids go to a good, continue going to a nice school, and make sure that my car ain't getting tore up when I'm driving down the road.
Right.
Make sure that we have public facilities. Like, a lot of cities don't have the so the girls and boys clubs, which is actually private
like
though.
A gym,
but like a gym,
and that type of stuff.
Yeah.
Like all the amenities.
Yeah, that's
right?
a point. Because it's crazy that you brought that up on like when the vote. Because the last time we had to vote, I literally was standing in the booth reading this thing, and I'm like, I pay for that. If it's gonna improve the city, sure.
Right.
Yes.
Or you sitting in the booth like I ain't even gonna be here next year.
Yeah.
Yeah, y'all on y'all own, right? Yeah.
But then you gotta look at Detroit. So Jonnita, you was getting ready to argue. So you're devil's advocate on that, right? Like, why am I paying such high taxes in the city of Detroit when the services aren't the best?
You paying for some of the vacancies.
Yeah.
You got it.
Yes.
You got it. Cities with like high vacancy rates and stuff like that, they take a hit because they're not collecting that revenue. And then you got cities where, well, most cities, if it takes somebody 3 years to get foreclosed on for property taxes, that's 3 years of income, and you multiply that times however many thousands of homes, that's a lot of revenue. A
whole lot of them. And Detroit is always at the top of that list of foreclosed homes from not taxes. People don't understand the city is ran off of the taxes.
Right.
That's how they pay for everything. And if you're not getting taxes because nobody's paying their taxes, how they gonna do any of these improvements?
They gotta charge the people that can afford to pay taxes.
You know what I'm saying? Hey, yes.
That's why some people taxes are sky high. But Detroit is not the only city like that. It's several other cities like that. But
they're the most flagrant city.
They the most known because they're the biggest. But it's a lot of other cities.
Yeah, we're talking about Michigan. I'm just saying they're the most flagrant, meaning that you pay so much, your taxes and everything you pay for in Detroit is so much higher than everywhere else.
Right.
And I'm not saying that it's fair. I'm talking about anything. Taxes,
auto insurance.
Every damn thing. It's like crazy.
The auto insurance company's been raping Detroit for years.
Yeah. And
years.
But this is why, because in the city of Detroit, you have so much more happening.
Don't be talking about
not necessarily.
This is a fact. This is a fact.
It's
factual.
It's somewhat factual, but you think about, so here's the thing, like with auto insurance, right? You'll get somebody to steal a car in Warren and they'll dump it in Detroit, right? What's going to happen to Detroit crime rates because they found a car in Detroit?
Nothing.
Right?
As far as, because that's the actuary that's deciding that is basing that off of, so that claim is filed in Warren because that's where the policy was based off of.
But what I'm saying is, I'm talking about the perception of it, right? So it's an abandoned car there, sitting there. It's a lot that goes on in different cities that happen in Detroit. Detroit just so much bigger that it's like everything just seems 10 times worse.
But that doesn't,
right?
So that doesn't go in Detroit though. So if you had a car in Warren,
Right.
and your insurance was based on Warren, that's why they ask you where the car is going to be housed at.
Yeah.
And if your car was taken in the city of Warren,
Right. Where you filing your police report at?
in the city of Warren, because that's where it was stolen from.
Right.
You're not filing the police report in Detroit.
So the city police department in Detroit finds the car abandoned. It's gonna go into the system, right?
Yeah, Warren is going to find the car. Warren, so they got a system.
Okay.
Warren, they got a system, and Warren's going because they got a system that talks to each other. Warren's going to say, "Hey, we found your car. It's in
Right.
Detroit." But that
Right.
doesn't affect Detroit's.
Are
that's
you
not
sure?
That's not a
Okay.
stolen car from the
All
city
right,
of Detroit.
we're gonna have
I
to
was gonna say, fact check.
We
Fact
gonna
check it.
We gonna fact check it with our
I
insurance
agree,
experts.
but fact check.
That's all.
But look,
Yeah.
y'all not going. So look, Detroit is still beautiful. It still has historical homes with lots of square footage, nice character, brick homes.
Facts. The best houses. So,
The best houses
They got the best
ever.
houses that I've seen.
Yeah.
So
in
if
the
you
state
come
of
through
Michigan.
with
Brick.
your families, with your money, pay your taxes so we can get better police, better schools, and better roads.
Facts. I mean, but it takes everybody. So
And call the police when you see somebody breaking in the car.
yeah, because
I'm like Charlamagne these days. We gonna
gonna
tell
snitch,
somebody.
we gonna snitch. No, Detroit has every other city. I mean, you got some cities that's worse, and you got some cities that's better. And
they're
that's
major
just-
cities, so it's different.
Yeah, it's major cities.
Major cities
Most major
always
cities,
have,
yeah.
always have bigger, more
everything.
issues because they're bigger, right?
More, what is it? More money, more problems. More people, more problems.
Yep.
More everything, more problems.
Yep.
Yeah, so basically what we're saying about this
So
is
pay your
it's important.
taxes.
Yeah.
If you don't like how much your property taxes is, go in, dispute it. You're gonna look at the data that we present so you can have a better understanding. And before you buy, do some research
Yes,
on property
do
taxes.
your due diligence.
Don't wait on your loan rep. Don't wait on your realtor. You need to go restart researching some stuff.
Self-care.
Educate
Yep.
yourself. Like, know what it is that you're getting into.
And Google, like, even if you can't remember like all the websites that's being thrown out, or you don't feel like going to the comment section, just go to Google and say tax assessor's office for your city.
Property
Right.
taxes.
Or even
Yep.
like, remember we had Ken and Gene on, and he was talking about the NEZ zone.
Yeah.
Go back and watch that episode and see, like, okay, this property was in an NEZ zone, and
That's
it
gonna
had
be
this
big.
exemption. You know
Yes.
what I'm saying? But it had a 15-year, and now it's expired. What does that look like for the
Yeah.
buyer? You know, that type of thing. So you need to do a little bit more research than, oh, I like this house. It's 15 offers. I'm going to pay $20,000 over. But now, how did that $20,000 over hurt you? And then now your taxes may go up $1,500, $2,000, $3,000 more a year. And now what does that look like in your monthly payments? So,
A lot.
Okay. So look, I want to talk about something before we end.
yep.
My name is Jonnita Stanton. I am a real estate broker. I specialize in selling residential real estate. Dibble and dabble a little bit on the commercial end. I do fix and flips here and there. And I have this unusual, unsurmountable amount of mortgage knowledge that I don't know where it came from, but I got it. I actually have a license now so that I can
She said
support that.
unsurmountable.
Yeah. And I would like Reggie and Shaka to explain a little bit about who they are as well, because people are a little bit confused on who we are on the show, from what
they?
I've heard.
They confused.
I was told that they thought that I was like the mortgage specialist.
Oh. I mean, I don't think we need to. I don't feel like we
Tell
need.
them who you is. Jeez.
No, I don't feel like I
You
need
know
to.
what? I'm
Okay,
gonna tell y'all. Want to know who I am?
No.
My name is Reg, and I'm an Aquarius.
No, I mean, the show is called There's Something About Real Estate, and I think if you pay attention to the show, we know a little bit about everything
Yeah.
in real estate. You know what I mean? So we're, in certain areas we are experts in, but we know a little bit about everything because we
Right.
continue to educate ourselves. So do the same thing. That's
Yeah, we know a lot of experts.
You can find me at Jaja Sells Real Estate on Instagram.
Yep, I'm at Reggie is Real Estate. Just Google Reginald Perryman and put real estate behind it. But if you Google me, you're gonna see Reginald Perryman. Now you may see some other stuff. And I was just telling our previous guest, Do not go looking for the songs I made with Bizarre.
Oh my goodness.
Some kid inboxed me on Facebook like every 2 years. Like, can I have a copy of I Had a Dream? That was the name of the song. And I'm like, dude, I don't even have that song. I got it on tape, but not CD or digital, right? So he's such a huge Bizarre fan that he hunted me down. And he was like, are you B-Boy Reg? And I was like, yeah, man. So
B-Boy Reg.
By the way, I'm a Leo.
You a Leo?
Absolutely.
Yeah, that's what's up.
Okay. You sure you don't want to tell people who you are?
Oh, I don't know mine, but you just follow the channel and then you can find me.
It's
you know what?
Sales.
Reggie texts.
It's all in our comment
Yeah, that's what I'm
section.
saying. I share all my stuff off of Reggie.
Okay.
So Reggie put anything.
Look, Reggie be sharing shit. We be like share, repost, retweet.
I really do. And
No, but on our YouTube channel though, in the comments, it has all of our IG, I think our Facebook and all that is on there. We're not hard.
I'm not hard to find, right? That's what I'm saying.
My cell phone number is public.
I think what you wanted to know is like who we are and why we're able to give the advice we give.
Yes.
Right. So, like you were an accountant before. You got a construction company.
I started off as an accountant. That's what I had my undergrad in, as an accountant. Then I started doing real estate investing.
Right.
Then I got my real estate license because I didn't want to pay 3%, right? Then I started an insurance company because I didn't want to give somebody insurance money. Then I started doing mortgages because I didn't want to pay somebody to do the mortgage.
So he might be right. Hey, look, he might be right on the insurance claims there.
Yeah, then I started doing, so a lot of this stuff, obviously I've done it, you know what I mean? So I'm not just talking from...
shooting from the hip.
Yeah, it's actual experience, years and years and years of being in real estate and all things real estate, you know what I mean?
Cool.
Then when it got, now we're a builder, you know what I mean? Licensed builder. And now about to be a mega agent office.
Are you gonna be a mega agent?
Mega agent office. Mega.
MAO.
Yes.
Oh yeah, what all that mean? Y'all got the Kool-Aid. Y'all making the Kool-Aid.
Yeah. See. Reggie about to be on our team.
Right. Hey, I got that $5,000 bet.
We're gonna have to jump over there. And he need more than that. We need $20,000. Then we're gonna come over there.
Yeah.
Tell him we're gonna come over there. He bet the real money.
Yeah.
Put the real bag up. Then we are gonna join forces.
Right. Both trying.
All right. I appreciate y'all staying with us during our little shit talking session of TSARE.
We wasn't shit talking. We was talking. Once you start reading the paper, that's some good information.
I'm talking about this $5,000 bet and this we've been around for. It's amazing though.
Yeah.
20 plus and Reggie is even further up there.
You want to know something funny? Like I remember when I was little, my grandmother was looking at this house. And I remember looking at the realtor, how frustrated he looked, because she was like undecisive and everything, and she was looking at a couple different houses. And then when I got older and got into real estate, he was still in real estate. And I was like, damn, but he was kind of still broke though. And I was like, dude, I don't want that. I don't want that for my life.
To be him.
But I understand it better because I went through it. But yeah, that was.
Look, this is where the conversations evolved. So. My grandparents sold their longtime family house, but my mother was their agent. And my grandmother used to go into the houses looking at people's, like, the corners of their floor. Like, no, this house is too dusty.
Wow.
Imagine that in this market. That's a whole nother show, y'all. Okay.
Yeah.
I'm done. It's a wrap.